Hello guys, welcome to the Trading Parrot. The Senate just ended 40-day government shutdown. Trump announced 2,000 tariffs, dividend stimulus, and at the same time, these sneaky whales started accumulating not just a little bit of Bitcoin, but over 1 billion in the past 24 hours. We'll look into socials, news, and the questions from my community in this particular video. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. 1,000 likes will be phenomenal. And if you're looking for an exchange to trade, bluffing could be the best option out there. You can win cash rewards. Any deposit that you make, you always get some cash rewards into your account as long as you use the link in the description to open a new account. All right, let's have a look. The US Senate voted 60-40 to advance legislation ending the 40-day government shutdown on November 9th, triggering immediate market relief. Bitcoin jumped 438% to 106.2, I think a bit higher by the time we are recording, as political gridlock dissipates, easing headwinds on SEC crypto ETF approvals and regulatory clarity. Gold rallied 2% on dollar weakness. The shutdowns and removes a major uncertainty overhang and sets the stage for resumed normal operations in financial markets. The House vote is expected for November 12th for final passage. Pretty much at the same time, we have President Trump announce a 2,000 plus tariff dividends. He said at the very least 2,000. To most Americans, 400 to 600 billion in total expense, triggering a fresh crypto rally. Total crypto market cap jumped 5% to 358 trillion in 24 hours as traders anticipate a repeat of 2020 stimulus effects when Bitcoin surged 1,000% from 6K to 69K by November 2021. Bitcoin broke 106K on renewed retail inflow expectations. Watch out, because we are not in a similar situation. When we started that rally on Bitcoin in 2020, we were at the lows. I believe we just passed at that point the halving as well. So the context is that some stimulus was coming at the same time where we had such a huge crash in March, April, in the beginning of a bull market. But many people out there are reading this stimulus package as an equivalent to that, and I insist that that is not the same, not just in terms of timing, seasonality, but also the price. We already rallied from 15K to 126K, so it cannot be exactly the same effect what we should be expecting. Analysts estimate 85% of US adults could receive payments, creating massive speculative buying pressure if legislation passes. The risk is that the Supreme Court is reviewing tariff legality, only 23% approval odds on Polymarket. So if they push back on the legislation for the tariffs, let's say they revert the effect they have, then in theory, those tariffs have to go back to where they came from. And we're talking about billions of dollars that have been already captured from those taxes. Yeah, that is liquidity back into the system, but that could also break some other glasses and plates in the way. So at the same time, we have some reaction on the market. We see the price going up into 107. That's the level line in the sand I defined last week that we need to reconquer to start to have some positivity. 103.5 was just too small for a rally fully confirmed. Major Bitcoin whales accumulated 10,000 Bitcoin, 1 billion notional during the November 9th volatility, signaling renewed institutional conviction below 105. On-chain data from Glassnode shows the whales have been 3 months net sellers. But this sharp reversal at 100K psychological support indicates tactical accumulation before an anticipated rally. Historically, well, buying near support precedes 15 to 30% rallies. However, smaller cohorts, 1 to 10K Bitcoin, have remained accumulators, creating a bullish base. Combined with ETF momentum and stimulus expectations, well, accumulation could be the capitulation bottom before new legs higher. If you're subscribed to my YouTube channel, Twitter, or Telegram, or if you are a Patreon member, you already receive this crypto Crypto Intelligence Report. The one for Monday, 10th of November is already out there. In this one, you're going to find everything that you need to know from around 30 crypto channels. All of this summarized in a very nicely written article. For example, Ben was saying that Bitcoin dominance has risen for 8 consecutive weeks while altcoins outperform across the market, suggesting that the 4-year cycle remains intact, but may peak in mid to late 2026 rather than now, with potential for a 50% correction, not a traditional 80% drop before another rally phase, a fundamentally different risk profile than previous cycles. If you want to read all the document, including the key themes to watch and all the trading setups that were mentioned across so many videos, to be more precise, we're talking about 24 videos that were released in the past 24 hours that were part of this analysis. You can find it in the post on YouTube, on my Twitter, on my Telegram, or it already went straight into your email. The full report can be accessed by Patreon members. Bar chart says that Bitcoin BTC scores a weekly close above the 50-week moving average, which is something that we already note in the technical video, the one that went live earlier. This one about metrics, dodging the bullets. I found it so cool to do something like that today. And that's kind of the feeling that you get every time that you recover from a 50 moving average. We had it in here multiple times. Every time that we get into this level, it's kind of dethroning the bull market support band. No one cares about that anymore. Every cycle we find an MA that is slightly below the one before. Titan of Krypton, local bottom, maybe possibly BTC just bounce off the broadening wedge lower line. This pattern is not the one I'm tracking, but I'm interested to see what happens when we get to an equivalent level as we see in here. The lower high in here got attracted the price when we reached around 116. Then we sold off and then we went for an all-time high at the top of the broadening wedge. At this point, we are in an early stage in here, having just the first impulsive wave into the first fair value gap around there that is located around 108. If we can manage to survive after the expected resistance that we should be seeing there, if we can put a higher low around that level, as I said in the morning video, then we can potentially go for 107 and try to take all those levels up until 111, where we have that massive level of open interest. If everything around these levels succeeds to break above 111, then we're gonna be above the point of control on the daily for all this trading range. At that point, we can start talking about 117, which is this target in here. He's looking for 116, more or less, is the same level. Breakout on the RSI is also noted in this particular tweet. Roman is not so positive. He thinks, I'm speculating, that after we get into 107, my level, my line in the sand, we could see a rejection, and he bases that in the fact that the volume is coming down, something else that we noted this morning too. Ted is pretty much noting all my levels. 103 and 107 were my two levels last week that I said we need to deal with them. 103 put 2 times resistance, 107 is right now, as we speak, the level of resistance. Luckily, we have right there a CME gap, but below we have 3 CME gaps. Octavio says you can cure inflation by giving people money to spend, running a 6% government deficit and having the Fed cutting interest rates. It is really contradictory what we are doing. We are printing money, we're trying to exit inflation, we have all the issues at the same time, and we're doing all the cures at the same time. Government shutdown finally ending. The US Senate just voted 60-40. Here is why it matters. The TGA balance is sitting near 953 billion. Once the shutdown ends, Treasury spending will push this liquidity into the markets, just as the Fed prepares to end QT in December. Historically, every time TGA spending and the Fed easing align, risk-on assets rally. With the CC back to work, pending altcoin ETFs could move forward again. Pro-crypto bills stuck in Congress are expected to pass once the legislative operations resume. This means fiscal taps are reopening, monetary tightening is ending, and crypto regulation will accelerate. Yeah, everything looks too shiny, in my opinion. The only massive caveat is we've been already in a rally. This has already been a bull cycle. It doesn't have to end but please do not treat it the way they want you to see it, which is we've been just in a bear market. We are coming out of a bear market. Conditions are amazing to start a bull rally when you've been already 3 years up only in Bitcoin. Yeah, altcoins have done terrible. Yes, we can extend into 2026. That is possible, but we need confirmation. And so far, we don't have it. November, though, as I mentioned in the previous video, if the monthly manages to point up and reclaim that line of support on the RSI monthly, that will be great. Merlin is saying Bitcoin is breaking out right now. We have a classic Adam and Eve pattern, sharp V bottom, rounded retest, breakout confirmed. The target 115k plus. Yeah, I'm happy with that. That means that my long is gonna be back in profit. Ted is pointing out once again what happened with the global M2. Remember when you were saying that M2 didn't matter on Twitter and people were threatening your life? Yeah, those days are gone. All the M2 retweeters are completely going silent these days. Price has completely detached from the M2 supply. And I think this could continue for some time. The Fed is expected to start injecting liquidity from next year and Bitcoin could catch up. Until then, it'll most likely consolidate between 90 and 120. And Super Bro is saying BTC weekly, tightest squeeze ever for the weekly. Some people tell me, please don't give so much attention to this dude. I have no background. I don't know who he is. He's just appearing randomly in my Twitter. I ignore if he's a YouTuber or just tweets. But it caught my attention that in the earlier video, I accidentally found this bullish falling wedge. And now that I look into Twitter, I'm finding the same thing. Remember that we need to be on the lookout for any pattern, any setup that becomes popular, then we need to step back down and say, well, that is already shit. Kila says that aggregated open interest is rising alongside the price. We noticed this morning that there were longs and shorts piling in with fresh positions. The people that are doubting the rally are entering shorts. The people that are thinking this is it, it's November, are entering in longs. And that is a recipe for volatility. But he's spotting something that I didn't see. While the order book depth is turning red, spot is gradually selling. You can see here selling on spot, not that much like in this area in here, but yeah, they're starting to sell. And when spot starts selling and futures starts coming in strong, that is a strong indication of short-term live moves, because funding rates, shorts, futures tend to close their positions at some point. Let's say you get into 114, 115, 16, and they say, well, that is enough for my long. They take profits, and then you do not have that support coming from spot that tends to confirm that the move is in the right direction, that is going to sustain for longer. You build foundations when you put spot together with futures. When you only put futures and you start selling on spot, that is elevated risk in that direction. And block diversity is saying that BTC testing very important level. That 107 definitely is important. Printing lower high in this area is bearish and road to 88k is open. So clearly he is bearish. He still believes on that particular target that we always talk about. The technical breakdown from the head and shoulder on the weekly points to that level. The reason to doubt that setup, the 88k, was that in the bull market so far, every time that we have a pattern like that on the weekly, it never reaches the technical target to the downside, or maybe just once in the full bull market. Most of the time, we do just 50, 30% or 60% of the target and we resume to the upside, which could be the case in here. If we take that 107, that is a clear indication that we have some chances to reverse that. A breakout on the top of the range above 120, well, that increases the chances for an all-time high massively. But not taking down 107, being rejected right there, puts the 88k back on the table. And when I say rejection, I'm sorry, but it needs to be a lower low relative to this. Just a pullback is not reason to get scared. Remembering here, we face the fair value gap, we have a pullback. That is a decent pullback. That didn't mean that immediately we were gonna take down the lows. We held the higher low and we continue into all-time high. That is what we need to do. That's what we need to do next. Let's look at the questions from my community. Such juicy fair value gaps at the top. Surely we will go there. Surely, right? I'm not sure. I don't know. BMO says, did we go low enough for this to be the first bear market bounce? I don't think so. So there's still the opportunity for this to fail. It could fail at 107. It could fail at 110, where we have all those VWAP connected to the all-time high, connected to 74, the point of control at 111. That is a big block of resistance. We need to flip the point of control into support to even do anything. Otherwise, it's just a rally to take down excessive shorts before another leg down. Can you explain SOPR chart in more detail? Looking at history during the bull market, blue signals seem to be predicting local bottoms. Yeah, that is an area where the longs close positions at a big loss. They realize a lot of losses. The more they realize losses, closing positions in the red, the stronger the case for saying that that was an actual capitulation. And that's why it tends to coincide in the daily time frame with many local bottoms, many reversals. Can you also have a look at current pumps in ING and TIA in terms of when to short them? That is something that I can take to my altcoins video, or we can also do it in the private TA. If you are an elite member, we can do it live. I think currently there's plenty of fundamentals to option one, to trade it to the upside just to follow the potential new upside trend on the shorter term. Take advantage of that, but always with a pinch of salt for a potential failure. There is nothing here in the fundamentals that is giving me any strong certainty at all. This is tradable to do along, but I am not sure this is something that I will invest as if it was early bull market and we are ready for a 2-3 year upside situation. If it is, so be it. But, I want good risk to reward. And I'm sorry, I don't see it yet. Thanks so much for watching. I'll see you in the next one. Take care. Bye-bye.